Hey, how's it going, YouTube? Today we're going to be taking a look at my portfolio and kind of seeing how it's been doing over the last little while. So this is a little update here. You can see our current value on this portfolio is pretty much $35,000. So this, I believe, is the highest the portfolio has gotten thus far. So pretty exciting stuff. Let's go ahead and take a look. You can see right here we're currently tagged up for the day. That was a terrible line there. So you can see the day we're actually down about $14 and some change there. If we go to the week, we are actually up about $560. So it's kind of been a little bit of a roller coaster here, back and forth. You can see in the last month, we're actually down about $1,000. That's kind of what I was talking about with the roller coaster. So we're kind of moving up and down. Anytime the market is down, I tend to buy more. Let me know in the comments too if you tend to buy more when the market is down than when it's going up. I really do end up slowing down quite a bit, and I've talked about it in previous videos, but usually what I'll do too is I'll look at my holdings and see which ones are doing the worst and actually buy more of those ones more than anything else, even when the market is good. So yeah, let me know down below what you guys do. So you can see here in the last quarter, we're actually still up about $1,800. About what is that? 3 months ago, we were at $23,400 in value for the portfolio. So we have really gone up really nicely here over this last quarter. And then over the last year, we're actually up still $5,000. This is why I don't try to time the market. I don't try to sell off my portfolio if I think the market's going to go down. I just keep on buying. So a year ago, you could see we were at 4,973. So really, really good gains there. And then if we go to our all-time, we're up about 5,200. And you can see here, we started this portfolio with $100. I love showing this part because I know a lot of people might look at some of these numbers and say, whoa, like that's a lot of cash in the account. And of course, that is a lot of money in here and everything too. But we started off with $100, and then we just kept investing, got more confident, and then moved up past that. Now, as we continue on, if you're somebody who's interested in checking out the same platform that I use, I'll have a link for them in the show notes down below. They're called M1 Finance. I absolutely love them. That link does help support out the channel, but I also do have a free tutorial training if you guys want to learn more about setting up your account to look something like this, where you have like slices into different sectors or in different groups that you would like, and then you can have them looking something like this where they're all separated and have like some nice target percentages and pretty much how everything functions on this app altogether. But again, I'll have those links down below. You guys can definitely check that out. So if we go back, the last month? So we're still down over the last month. You can see here, out of all of our pies, let me just make sure everything is on screen. Actually, let's zoom in a little bit. Hopefully that makes it a little easier to see. So over the last month, you can see since we were down, which by the way, we still made about $40 in dividends over the last month. What? I love it. Even though I've gotten less focused on dividends, I still care about dividend growth and everything too. So just something to keep in mind. But you can see here, so our tech is down. I don't usually pay attention to this percentage, just FYI. Just dollar amounts. So we're down about $300 in our tech, about 300 or 350, sorry, in our tech, 300 almost in our growth, about 115 in our retail. We were actually up $122 in finance, about $70 down in our industries. Real estate was down almost 500, geez, $360 in there, and then health was actually up $51. So you can see two sectors were doing good. This is why I love using this platform, because it's nice to kind of see which sectors are doing good and which ones are maybe not doing so good, and it's kind of easier to like pinpoint some things. So if like we go into finance, we can see here, we had two of them that did well, and then the other two that didn't do so well. But obviously, combined all together, we still made it a positive month for this sector overall. So let's go ahead and kind of go back here and take a look and see how everything else is doing. So our real estate has been doing pretty bad. All of that pretty much has to do with Airbnb. I added them in, and they just keep dropping in price. So right now, you can see here, we own about 14 shares, and then our average share price is $168, and they're currently at $134. So I've definitely been buying during this dip a little bit more to try to lower this dollar cost average. I do believe in Airbnb for the long term, and I do understand for a lot of people that Airbnb doesn't give out dividends, so I will not have any earned dividends for a long time. But there's a possibility that maybe they will in the future, and I'm banking on growth for the service in general, and then obviously hopefully in the future if they add it, that's going to be an even added bonus, and we're going to have a really good yield on cost because we're buying it at this price point versus what it'll cost you in 15, maybe even 20 years when they start giving it, if they do. Obviously there's no guarantees on that, but companies, and I mentioned this before too, but like companies like Apple never used to pay out a dividend, and now they do. And I mean, their dividend is abysmal in comparison to, companies that are paying 3 to 4%. But right over here, 0.66 is not great. But if you bought 10 years ago, your yield on cost would be like amazing, amazing. Plus all the growth that you had over that time as well too. If we go into our holdings over here, I like to see this. And for those that are wondering about unrealized gains, this is just everything I haven't sold yet. And if I did, I would have $4,000 in profit. This is obviously down pretty significantly over the last couple of weeks because, the market has been down. We're still up 13% though, so that's not too bad. And this doesn't include dividends. That's why I like the number up in the front. If we go back, this number right here includes dividends that we earned. This also includes anything that we sold for a profit or technically a loss is accumulated into this total right over here. So for me, having started this portfolio back in 2019, this is what we've gotten. So if I sold everything today, I wouldn't be getting the 5,200 in gains because some of that I've already realized. This is what I would be getting today. But again, I kind of like seeing both numbers because it really does help out. If we go to the unrealized gains here, I've talked about before, like some of the top stocks, and then obviously some of the bottom stocks. I mentioned that, Airbnb is not doing so great. So we're down to about 20% on them overall with unrealized gains / losses at that point. And so I've been buying more into them. If we go into my activities, we can see actually just recently I put $200 just in Airbnb. I don't do this very often where I make a deposit and all of it goes into one company. I do usually like to split it up, but because its price point has dropped pretty significantly, I wanted to lower the dollar cost average, get a better price in for my stocks, so that way when it does go back up, we're going to see those really nice gains. So that got us 1.45 shares, where $200, I think at its highest was like 219, wouldn't have even gotten us one share. So I see that as a great savings for us now. And, if I go back the day before, I did a much larger deposit. So I did $800 here. This one I let M1 Finance kind of do its thing, where if you don't know, it pretty much distributes the money according to your percentages and all that stuff. So out of the 23 stocks that I own, 15 of them got purchased this last time with this larger deposit. So we had things like Amazon got $47, which doesn't really buy a lot of Amazon, of course, because it's a massive, massive company. But hey, fractional shares make things a lot easier. ADP, Texas Instrument. Was I on screen for that? Hopefully I was. Hopefully you guys saw the Amazon and stuff like that. So we have like Starbucks. We have Lockheed Martin got some money in there. We got NextEra Energy, which is actually one of the only 3 stocks in my portfolio that is with unrealized gains in the negative. I think you might have seen that. We got quite a bit that went into Ross and Home Depot. Those were some of the largest ones. I really love Ross. I think Ross is a solid company. They just reinstated their dividend recently, but even when they actually suspended their dividend, I still ended up keeping them for the long term. So that was really nice that they reinstated it. A tiny bit went into Costco, a little bit went into Airbnb, some went into Square. Got a good chunk went into Tesla. This one, we got in at 580, so that got us 0.18 shares, which is about 18% of one share. And then let's go back in here. We had a little bit go into Google. We're almost at a full share with Google. I'll actually go back and show you guys in a second here. There's Home Depot. So we had a lot go into Home Depot. I absolutely love Home Depot. It's kind of been one of those like quiet stocks where let's actually see how it's doing right now. So we're going to go to Seeking Alpha, as you can see here. So yeah, Home Depot has just been killing it right over here. You can see it's a little bit on the back end where it was in like April. So I had a really nice peak at 341, and it's back down to 316 as of this recording, obviously. But it's been doing pretty well. It has some good dividends too. If we go down here, you can see its current dividend yield is 2.10%. Its growth rate is about 20%, which is fabulous. And then you can see the payout ratio is well under 60%, because anything under 60%, you're doing pretty good with having a really good growth year over year. And you can see, yeah, they had 20% on average over the last 5 years. I think the last one was around 10%, so it's definitely not as good as, some of the other ones, but nonetheless, it has been a really good stock in my portfolio. So I'm glad that we're buying some more. Obviously, with $115 and its price point currently, it's only buying about a third of a stock. So 1/3 of the stock that I own has gotten purchased just right there. We had a little bit go into Ally and then Facebook as well too. And I mentioned something that I was gonna show. Oh yeah, my holdings. So right over here with my holdings, you can actually toggle here with the amount of shares. So I kind of like doing this. Obviously, the number of shares you own in a company is actually not as important as the amount of money that's in there, and I'll show you why. So, with this company NRZ, I know a lot of people know it. We have 85 shares. Seems like a lot. Obviously, my average price is just under $9. We have a total cost of $764 and a total value of $872. But just to kind of show you, if I flip this around, so Amazon, I only own 0.62 shares. So I own only 2/3 of a share. It's not even a full share yet. And my average price is $3,124. My cost basis is almost $2,000. We're only up 4%. Amazon's kind of been on a flat line for a long time. I don't know if people have seen that. Let me go in here. They've been relatively, I don't want to say quiet, but people have been quiet about Amazon for quite some time lately. You can see here, they've been relatively flat after everything that's happened in 2020. Yeah, they've been flat for a long time. So if history does end up repeating itself, which obviously no guarantees, you can see that happened before too, and then it had a nice spike. Happened before too, had a nice spike. And then if I go back to 10 years, you can kind of see these things happen relatively similar. Again, it's not guarantees, obviously, and it's not just because of that I'm like, oh yeah, we're going to see some nice jumps. If you look at their financials, if you look at their earnings reports, you see some really good things indicating that, Amazon, could be continuing to go higher. Obviously, the price point just seems crazy because it's over $3,000, but, considering the fact that you can buy fractional shares, the price point doesn't really matter as long as the fundamentals of a company and the things that they're doing and, how their books look, are they into debt? Do they have debt? How much are they bringing in? What's their margins? Those things are the important stuff, not necessarily the price point of a stock, especially if you can do fractional shares like we can here on M1 Finance. But you can also see here. So this company, so Amazon and Google, these two companies are the only two that I don't have a full share in yet. You can see Google, I'm a little bit closer because the price point is a little bit lower than Amazon, so it's easier to kind of build up over time. This one we own 0.788, so we own, 78%, almost 79% of one share. So I'm excited to hit, one on here, and then I'm also really excited to hit one on Amazon as well too. You can see anything beyond that, we're starting to build up to 3, 4, 5 shares and all that stuff as well too. So just going through that, kind of seeing it, that's personally what I like. I even go through here and one day hopefully we'll get over 100 with NRZ. Hopefully one day we'll get to 50 with Apple, 30 with Ally, 25 with NextEra Energy and all that stuff. Having the number obviously is big because the more you have, that means the more the price goes up, the more you can sell it for if you decide to sell it or whatever you want to do. But, building these up beyond, single digits is really cool because right here you can see Ross, we just hit over 11 very recently. Discover, we're close to hitting over double digits. I'm just kind of going through that. It gets me excited to keep on investing and getting these funds in here because if we go back in here and look at our trade here recently, you can see, so with Starbucks, we put in $7. It's $7 is not a lot, and it gave us 0.06 shares, so it gave us 6% of a share. So it's just every little bit is chipping away at it, and it's gonna help us get to a point where we own full shares of these companies. So if we go back to Starbucks, we own 7.33 shares, and that was just building up over time with small deposits, getting to a point where if you take a look at it with Starbucks, we're up 18% on our money, which I couldn't have done if I couldn't buy into, little fractional shares and get that money working for me a little bit better versus having to wait and buy full shares every single time. So that's why I like M1 Finance personally, is because I can do things like that where, you know, I'm making these, you know, deposits, sometimes $800. That was quite a bit of a deposit. And, you know, I bought in to Facebook at $15 into Facebook, got me 5% of a share. What was it with Amazon? Amazon's usually really funny. So, you know, we put in $47 because of its massive price point. It gave us almost 1.5% of a share. Like, that's how small and insignificant $47 might seem when buying one share of Amazon. But, you know, when the stock keeps moving up and has growth and value, well, that $47 is moving upwards because we own that, you know, small percentage of one share. So I personally like that. I think it's great and exciting to kind of own these stocks in, you know, increments and then build up to where we own crazy amounts of shares of these companies. You know, it'd be nice for one day to have 85 shares of Apple. Like, that would be great to see on the portfolio. What I want you to do next is actually check out this video right over here to keep on watching and learning here on the channel. My name is Dennis, and I'll see you in the next video.